folks, welcome to where are we? Thursday, the 23rd. Is that right? Where are we? 24th. Thursday, the 24th of February 2022. And we have an invasion in Ukraine. Russia has moved in, shelling overnight. We have reports of this in Kiev. This situation has really escalated quite fast right now. And so, what we're looking at is these equity markets are really hammered to the downside. Oil up, new highs on day as I'm talking 98.51s to 64s moving now. Gold on the highs of day 1950s. And the bonds also up. So getting across to look at these markets right now, you can see really. Let's look at oil here, big one, right? So let's drop the VIX down. So you can see oil really massive moves here in the overnight. So really that risk gap up, right? Small gap up here, and then the market has just ripped up to being 7% up right now on oil, 98.67 at market. Target is 102.72s for me on oil. We had the pullback here onto this downtrend. We've had the pullbacks onto the 96.22s, bottom of this demand area, and I think we're on a rocket ship now to 102.72s. I think this week 107.25s is within our reach. I know that's a big move, but this is not your normal occurrence in this market right now. So looking at this also on the daily, you can see this week just bid on up here, 7% up, really at market. And so breaching this downtrend that we have, which I talked about live on YouTube as well here. So that downtrend is coming in from the highs here of 2011, and then the highs also 2013, and then that gives us our downtrend. But we've had several of these sort of downtrends breached. For example, back here on 20 May 2021, and we just keep on pushing up. So no food for the sellers here at all. And it's not really the short scenario, despite what their talk is in Vienna about the Iranian nuclear talks and all this, that, and the other, potentially bringing on 2.3 million barrels a day back on supply now. That's irrelevant in the face of an invasion in Ukraine. As to what we have now, that's completely irrelevant. So, looking across on the U.S. markets here, let's look at the Nasdaq. So far, we're down on the Nasdaq 2.43%. Not the biggest morning down we've ever had in this market, but still this is significant downside seen here. Hasn't quite gotten to the lows that we saw in May 2021. That's 12,903s on the weekly bars. It looks like a bit of a target here, to be honest. We could probably get on something like the 100-week moving average is just really holding up the trade here on the bottom of the day. Is that level you can see here on the Nasdaq center left of your screen? So that's kind of what's propping up the market to stop where it has stopped right now. So lots of food for the buyers down at these levels. So if we come into the US session and we're still holding above here, I think the snap back to the upside is way more likely than further downside here. Okay. A couple of levels that we could push to down below will be 12,431s on the Nasdaq. So there you go. That's really a look at what's going on here in this market. On the SPOOs, on the daily, actually sorry, in the weekly here, we can see again, just held up in the middle of nowhere. We could probably put on the 50 exponential weekly moving averages up here. Yeah, okay. So really we've come down to what was the low of the week of the 3rd of May. So a lot of those levels from May coming into play here. Further upside, I think a bit of a bounce is likely here during the European session. However, in the US session, I just can't help but think that there is going to be further selling. And on the SPOOs, we've been monitoring this gap that's been outstanding from the week of the 29th of March through to the following week, the 5th of April. So that gap still remains at 4,004.5 down below, and I really see the market needing to trade here, close that gap, get some business done on the 100 weekly moving average, and then look for the buying to come in around there. But by and large, we've wiped out pretty much all of the gains from 2021 so far in a lot of these equities markets. So, just be aware of the level of value there is at some of these much lower prices in these markets. All right, so wouldn't be surprised to see quite the snapback coming in at some point in this session. And the SMI also here in the background. We'll get the Dow up and have a look at that here as well. The Dow, yeah, let's get onto the weekly bars on the Dow. Similar little you know, similar little push down. Well, not a little. I mean, we're down 1.87% at market pre US session. Doesn't really look like there's a decent place to buy here other than down on the 100 weekly exponential moving average, 31,791s, and that market on the 60-minute here. Just really, I think it does want to get back to this line in the sand support area that, was a little bit of respite on the reopen last night, but then just got completely smashed down. So, you know, I don't really see decent support coming in anywhere around this open kind of water space we're in, apart from the 100 exponential weekly moving average here. So I can kind of put that one up here on the 60 minutes. You see that kind of coming into play down here, 31,790 is just below the S3. So, yeah, a lot of excess on the highs since the open here as well. Let's see. Let's just restore that one. Minimize that one. Let's see, what else can we see here? Gold, also, yeah, I mean, this gold obviously taking a bid back to, the risk off assets, or sorry, risk off assets, really, obviously getting that bid, the bonds, oil, gold, all up the Dixie, driving it all, really. I think target up on gold 1981 spot 2, which was the high of the week of January 4th, 2021, right? So we've erased a lot of that selling from 2021, and now the beast has awoken. The beast has awoken. So please have another video on YouTube about, gold. Is it time? And it certainly was time, and it is time for gold to take a bid here. So targets up 1981 spot 2, 2000, and then the big kahuna of 2141, which is that more recent all-time high, I think, on gold. So back adjusted, of course, back adjusted, as these are futures markets we're looking at here. So what else to talk about? Nat gas, really, nat gas. As I've said a couple of times, this is the main barometer for me from this or over this invasion scenario, right? So, we've finally gotten free of the shackles of this lower range here in nat gas. Let me just kind of, a lot of gap areas here on nat gas, but if I just kind of load a few more days onto this, probably like say 50 days will load here. So I need to streamline my charts. Yeah, I mean, this line in the sand, I have had it. I can't actually load more days on it. Well, I can, but I don't want to waste time on it. But lovely line in the sand here. 4 spot 635 is low to 4 spot 802 is high. And you can see that once we pushed above during that massive push overnight and pull back, we're still bid. Target up 4 spot 936. And then above there, we don't really have a meaningful swing target. I mean, yeah, there's going to be a little bit of profit taken at the 5 spot 164s. Also, the 5 handle is a big one. But I think this market is only going to get crazy bid to the upside this week. I think we can easily be trading sixes by the end of this week. So that's it on nat gas. Really, dollar. Yeah, I'll finish up on the dollar, which is the big kahuna risk product. I'm quite surprised that we're not even further up on the dollar. We are up 0.6% at market right now. So 97s basically is the resistance above of marked up here on the 60-minute chart, and you can see it here on the weekly. This is the spot cash market for USD. So I think we can actually rally not only to the 97s, but 97 80s and above, I think, on this level of risk right now. So, I would really be careful if you're thinking of buying some euro here. We are about to have a retest of the one spot 121.25s, which was the low of the session currently on euro, just down here below the S3. I don't see it holding up, to be honest, at all. And see cable no refugee from this stronger dollar environment right now. So, all right, that's it for me from today's session. Listen, be careful out there. The volatility, we're coming into max volatility on these markets. The VIX is trading around I think it was 36s. Just let me check on that one right now. So much higher level of volatility. Yeah, VIX is trading, sorry, 32 spot 65s. We could be pushing up to 40s on the VIX over this sort of stuff, like 35.95's next resistance up on CME VIX. But yeah, do be careful out there. Have a good session. As always, please do click to like and subscribe to stay tuned. And we may be going live again over this situation this week. All right, have a good session. Take care. Bye bye.